my screen at the same time, but I think we've got a great setup now. So
He's showing you up, Dean. You guys got to catch up.
I do all the grunt work with the beta testing, then we rolled over to Dean's setup after it works. So
we're live.
Okay, we're live, guys. Thank you so much for joining us. Today's trade alert is very similar to what we put on the last several trade alerts. We're just buying cheap put option protection, expecting the SPY ETF to continue melting higher. Today, we brought in a profit of 89 cents a share from Friday through today. In our model portfolio, that's 1,900 shares, or a gain of $1,691. Your steps are per 100 shares of the SPY. Allow your February 19th 333 SPY put option to expire worthless. You could try to sell it and get a penny like Karen did. No harm in that. Step 2 is to buy to open the 336 SPY put expiring February 21st. Now, notes, a lot of you just joining the program are expecting to sell covered calls for income, which is a great strategy, except for when China is in the period of crashing and you have massive money flooding into the US trying to escape Asia. So that's why we're expecting such a big melt up. It's not necessarily a good reason for stocks to go up, but that is our call as of currently. So expect your SPY to deliver the profit, your put option to lose 100% of its value. And as we start to push higher and higher and start to see supply chains break down, to look for us to potentially actually reverse the prediction in our trade. For now, I do think the SPY is going to blow past people's expectations as it has been recently and continue melting up. The previous trade started at 337.51 on the SPY, and as of closing it out today, was at 338.76 for a gain of $1.25. So you wonder, if we're betting up, why are we buying downside protection? You have to have some humility in this game, realize how leveraged the system is, and understand at some point, China's collapse will flow into US equities. Also, we have something like 16 central banks cutting interest rates. Central banks typically predict stock market crashes as they're melting up ahead of trouble, and they're cutting into problems. So we will continue buying downside protection as we always have in this program. This allows you to sleep like a baby at night and not really worry what the heck's going to happen between now and our next trading period. So we're more than happy to shed some of our profits to be able to skip any massive losses. Now, typically I'm calculating a maximum loss in any trading period of around 1%, so that if we do get a pretty massive crash in a 48-hour period, it could be pulling back 3, 5, 9% in a short period. We'll be cut off at 1% with this trade. Scrolling down, we have our return if you're just following the SPY program. Now, tomorrow is our options trade for emerging markets, TLT, GDX. I'm not going to cover those positions today, as number one, it would confuse new people, and number two, it's part of our pro service. So continuing on, this is a screenshot from Thinkorswim from an iPad on the iOS app. This is what it would look like if you're just entering the position. You can see your maximum loss is $312, just a little bit under 1% versus the total value of each share. To jump into the trade from scratch, you would be picking up 100 shares of the SPY, so it's going to cost you $33,912, and then also picking up the one contract per 100 shares of the SPY of your February 21st 336 put. In our trade, it costs us 36 cents or $36. Here's a look at the option chain. And again, I'm simply currently going for between a 25 to 36 cent price range on the put option and trying to aim for a maximum drawdown of no more than 1% in any given trade alert. Now, this is a bonus that we've added in for those of you who want to take on a little more risk and potentially get more gain. our buy and hold strategy does this without any options. So if you're trying to follow our program with no options, you would have 1 share of the SPY, 2 shares of TLT, 2 shares of GDX, and 1 share of Yang. That's the inverse of FXI, triple leveraged. And then you'd have another 44 in cash. So that'd represent how you would allocate approximately every $750. Now, again, this has been the returns during an extreme bull market with rate cuts going lower. So you don't have always this sort of circumstances where you can be so passive and very little changes and have such a nice return. I do expect the markets to get significantly more difficult to trade as we approach the zero bound on the federal funds rate, which really changes the dynamic of how we're going to have to play this and will really show off the value of options trading. Okay, so that's a review of the trade. At this point, I'm going to take a quick break to go into questions as I switch the iPad to present mode. Ryan, if you could go ahead and unmute the crowd and just keep a close eye on any accidental noises for us. Let's see if we have any questions before we go any further. I see Don Lawson has his hand raised.
What's the lowest it gets down to? And is it more of a dull achy pain?
Uh-oh, got a robot coming in on us. Just kidding. Don, I see you have your hand raised, but your mic's muted. If you have a question, go ahead. Florian Taylor, I see your mics are unmuted. Would love to hear from you. Any other questions out there?
You know, Florian typed in earlier that he didn't have a microphone. Let's see here. Jose Perez, do you have a question, bud?
Yeah, can you guys hear me?
Yes, sir. How's it going, Jose?
Hey, how's it going? Great to hear from you. Good. It's a simple question. I have another account, which is not my brokerage account. It's my 401k. And I think we talked about this a little bit before, but I'm limited with respect to what kind of index funds they allow me to use in there. And for bonds, I'm really limited to a total bond market index fund. And so the question is, would that behave in a similar direction as a TLT?
It's got to be. So right now, there's only one product you want to focus your attention on. It's the 30-year U.S. Treasury. Soon that'll include the 20-year. So just make sure it's targeting the, otherwise you're not going to have enough leverage in the bond product. Now, also government bonds are totally different than just a generic corporate bond. As obviously the income source for those loans are totally different. One's from the government, one's from corporations. So the bottom line is it's 40% equities, 40% treasuries on the long end. So that 30-year treasury is 30 times more leveraged than the 1-year bond, for example. So a lot of people like to play the mid spectrum of the yield curve. And that, you know, some people, that's all they do. They're an expert at every little point on the yield curve. For our purposes, the most leveraged portion of the yield curve is going to be the most beneficial because the TLT is acting as your put option on the SPY. So if we don't, okay, and right now we have this relationship working really well because not only do we have a big bid for US Treasuries, we also have the expectation of rate cuts. So right now, this strategy is just beautiful to own those two in equal proportion.
Okay.
Kathy says, have you? No, Kathy. So I would much rather trade emerging markets because it's not as manipulated by China, and then use the inverted option trade. That's much less risky. So Kathy, yeah, we'll continue to trade emerging markets over Yang with our option program. But in the ETF spectrum with inverse products, the Yang's got the most liquidity, so it makes the most sense for buy and hold folks. So yeah, Jose, I know we had sent you some, what was it? Which was the first, for
It's a Vanguard
Vanguard?
index funds. Yeah.
So I think it was VOO was your SPY. What was your TLT? I had found those for you.
Yes, I have them. I have them written here somewhere. Yes, I don't have them on hand, but I have them.
Okay,
It's
good.
no problem. I got your note. Thank you.
If anyone needs me to help find the equivalent of the SPY or the TLT for a special 401k, it's really where we're seeing you don't necessarily have these kind of common products. Just let me know. I'm happy to go through, and they always have just a rip off of these very popular products right here, the SPY and the TLT. So we can certainly do that for you. Also, I will make sure it's more clear what the percentage is. So it's 40%. Let me just put this in here so everybody understands the strategy in general. Now, again, this buy and hold looks really attractive right now, but we're coming to the end of the rope where you can be so simplistic and have such a strong strategy. As we get closer, and those Fed minutes are coming out today, so I'm dying to read them to see what they are cooking up next for us. But as we get to the zero bound on the federal funds rate, things get very hairy for 99% of all money managers who rely on this strategy, half bonds, half stocks. And not only do they rely on that relationship, they're leveraging into this strategy sometimes 5 to 10 times. So this is just under 10%. I round to the nearest 5. So I think that's more like 8, which again, we're recommending 1% in Bitcoin and 1% in Ethereum. Those are absolutely killing it. My son's portfolio has a massive gain this year following just the cryptocurrency trade alerts. Murray's been asking me every 15 days whether you should buy Bitcoin for a better part of a year. So answer's still yes. And that's also something we cover and teach in detail in the boot camp. So you may actually want to wait till we do cover that in the boot camp, Murray, if you've never been experienced with that, because it is a little bit tricky. Okay, so let's see, what other questions do we have out there? Let me go ahead and flip to my iPad so I can show you guys some content. But yeah, sitting pretty nice. I think it's actually a 2.2. I took the screenshot a little earlier, but we're already at 2.2% return on the SPY so far in February. And even though I am obviously predicting a melt up, it's not for all the best reasons.
Hey, Jason, it's just something that's been on my mind. Even though you just got the information about Foxconn, for instance, I'm trying to wrap my head around this a little bit with the whole China thing. Here's Foxconn. They're not, they're nowhere, up and running like they were. It's been pretty obvious they're not going to be able to for some time. They already know Apple's going to have problems getting supplies. So is everybody else, frankly, in this country. That's my concern is later this year, I think we're in trouble. But just specifically with Apple, so they smashed, well, they didn't even smash. I just looked at the stock because it's so heavy, with this whole China thing and the whole coronavirus thing. It, went down, what, I don't know, 2.5%, big deal. And now it's up like whatever it is, 5%, whatever, 4.5%, something like that. Now I'm thinking, how in the world can this go up when they're not going to be able to get the components to, I don't know, cart before the horse? Something isn't adding up to me, on how in the world are they thinking they're going to have their if they can't make the product, I mean, granted, I understand they have services as well, but come on.
So I think they've been shut down for about 3 weeks. 200 people out of 150,000 in one key plant are back to work. So yeah, I believe if you go back through history, the Fed cuts rates predicting a stock crash, not after a stock crash, into a stock crash.
Right.
And it's usually in a period of a melt up that all this calamity happens. So I think we have the perfect conditions for a massive stock crash this year if China can't get back to work, as well as other emerging markets. So the knee-jerk reaction is China printed $250 billion, and they basically let everybody get out of equities that they can't control without crashing their stock market for now. And those people are continuing the same strategy we do. And I'm not talking about retail. I'm talking about professional money managers. You got to have essentially half your capital in stocks, half your capital in bonds. And it creates this very safe strategy that works over the last 40 years because we're coming from such a high interest rate level. Okay, so they're just, all I see is they're just swapping out emerging markets, Asian equities for US equities. And everybody's sitting back to just see, are they going to get back to work or supply chain's going to break down? But yeah, obviously if supply chains break down, we're going to be very happy we own the TLT. and as well, just as happy that we have our put option sitting underneath at all times. So if they get back to work, we may just have all the stimulus and have a rocket ship on the SPY. And that may be that, but my expectation is they're going to have a hard time getting back to work, and that this virus is a lot more problematic than the governments want us to know about.
Oh, no doubt. Well, you know me.
Yeah.
And so far, my skepticism has been accurate.
Yeah, it has. Now they're saying they may have known about this all the way back in November.
I'm telling you, it was pretty obvious to me. And I'm thinking there's going to be some very, nefarious folks out there who are going to take advantage of this and try to make our, this year going to be very tough. And I think the election is going to be tough, and it's going to get twisted, and everyone's going to use it as leverage one way or the other, whether warranted or not, they're going to do it. And I think we're in for a very difficult time. But when nothing makes sense, you just gotta go, wait a minute.
Yeah. Yeah.
And nothing makes sense. There's zero, and it's one thing to prop everything up, but it's another thing to go, wait a minute. It's one thing to have Chinese New Year. Now it's extending. Yeah, supply chain is already a problem. Did they front run themselves because we had the potential trade war thing? Sure. So we have a little extra, but that's going to, companies everywhere, especially here, we're much more. This is really interesting because we are going to find out very quickly. I don't know why they haven't realized it, that we're a whole lot more dependent on some of the bits and pieces of supplies, not only us, but everybody else in the world, to create their products, than they thought they were. Well, it's going to be interesting.
I agree.
Hang on to your hats.
Yep. Buy a cheap put and ride this rocket ship for now.
We call it hurricane insurance.
Mark,
it reminds me of a Greenspan saying, the market can remain irrational longer than you can remain
solvent. Exactly. Well, that's it.
Yeah. And so it just makes our SPY TLT strategy so easy and simple right now. Let me go through some headlines I had collected, and
thank you.
And I'm going to leave the mics open, so feel free to put out any comments, questions. We got a lot of people live, 26 people live. So if you're new or old, please say hi. A lot of clients in here who haven't said hi yet, so missing your voice.
We resemble that remark.
Oh, shush.
Oh.
I can't help it.
Now we got Oscar out. Oh.
We should add rule number 3 then. The markets can remain irrational far longer than you can be solvent.
There you go.
Yeah, that's true. How's it going, Oscar?
Okay, how are you?
Hospitals freaking out yet?
One of my facilities has, but overall, no. They had a patient show up that stated that they had been in Hong Kong last week, and amazingly, everyone panicked. You know, going crazy looking for masks.
Everybody jet out the doors.
Yeah, well, I wasn't there, but I had heard about it, and needless to say, we had to sit down with everyone and say, you're the last people that need to panic. You're well prepared for anything like this, so we'll see what happens.
Yeah,
But yeah, people are on edge,
sure. Makes sense.
and I can't blame them.
That's a total unknown. I mean, there's so much information going out there. They've mixed it. Somebody's trying to use HIV antivirals. I mean, because they're desperate just to see if it works. I mean, have they mixed? Come on.
Yeah.
I mean, there's.
When's the next South Park season start, Mark?
Uh-oh.
That's going to be a good season.
I don't know, but I saw one the other day, and oh my God, I just fell off I was watching with my wife, and I fell out of my chair laughing so hard. It's called The Miseducation of Lisa. And it is, they just have a way of putting things together that hit home so hard. And it's just like, it's hilarious. I won't give away the punchline because that's what was so shocking and hilarious and personally hit me. And I think a lot of you will feel the same way. But the Miseducation of Lisa, it's worth watching.
Nice. The latest Simpsons episode is all about STEM, which is pretty funny. Obviously, China's.
That's the one.
Oh yeah, that was so good.
Yeah.
Yeah,
that's the one.
I love that one. Episode 12 of the latest Simpsons season is excellent. Okay, so let me go through some headlines. So here's an interesting photo. Someone, I don't know how they built it. Very, very nice. Just central banks worldwide are cutting interest rates. So that is, again, designed to protect stock markets, but essentially guarantees that we can expect the TLT to go up as long as central banks are in this policy regime. Ahead of that, he had posted rate cuts over the last year: Fed 75 basis points, ECB 10, Denmark 10, Australia 75, Brazil 2.25, Russia 1 3/4, India 1 1/3, China. Now again, I think China is going to be doing some pretty serious cuts here. Korea half, Mexico 1 1/4, Indonesia 1, Philippines 1. Turkey 13. I don't even know how you could, I guess they had to hike it really high to fight inflation prior. Going back up to the top of my feed. So I'm just retweeting. If anybody does want to follow my Twitter account, I don't post original content at this point, but I do retweet the content I think is important so that I can easily go back through it on our live webinars. So if you want to have a real-time stream of what I'm paying attention to, feel free to do that. It is, I think our handle is generates income. And so I do have what's called lists. Thanks to Dean, found this little handy. There's a guy named Longview who has created a lot of different lists that anybody could subscribe to. So I'm subscribed to all of them. He has them very well organized. So depending on what the focus needs to be on, I have one specific one that I think is a little better than his for tracking the virus. So there's a lot of good content always coming through this specific list. So some extra resources for you guys. Let's just look at what I've highlighted. Okay, so Macaw is going to go ahead and open back up. Their gaming revenue could decrease by 89% year over year. The big controversy this morning was that 3 Wall Street Journal head journalists were kicked out of China for someone else's article critiquing the dealings of how the CCP has been dealing with the virus. And then CNBC had their host on this morning, and they're asking her if she feels like she gets censored. And she's like shaking her head nervously, saying, no, we're not, like shaking her head, yes, nodding yes, but shaking no, saying, oh, no, it's not like that. So that was an interesting interview. I'll have to find a way to, maybe I'll start posting the best YouTube videos I like to this feed as well. Adidas China business slumped 85% due to the coronavirus. China expels 3 Wall Street journals over racist opinion piece. Again, it was because they critiqued the dealings of how they've dealt with this Princess cruise ship was a disaster. It did give us an interesting sort of like petri dish of how fast it spreads. It's extremely contagious. So this was a good piece of data we could have been analyzing outside of China, which if you know, I stopped doing my little spreadsheet because John Hopkins data didn't even keep up with what we're getting out of the Diamond Princess. I mean, there's more cases in here alone than what John Hopkins was presenting. So I started to realize the officials are trying to suppress any data that would alarm anyone. This guy has some charts with some decent forward indicators on inflation, just showing that there's extremely low chances of inflation coming in, at least with the metrics that the Fed focuses on, indicating potentially lots of room for rate cuts, which again would be very good for our TLT position. Case freight index crashing. More reason to believe we'll have rate cuts. China's running out of cash. Okay, so people might think they're trying to be mean to the US with this statement, but I would argue that they just are in a desperate time period where they don't want to be in a situation where they're running out of cash, but that's what's happening. And so they've lost half of their treasury holdings. China, the second largest foreign holder of US treasuries, cut its holdings by 1.93 billion in December, the biggest cut since July 2018. 54 billion in treasuries has been sold. Now, for those of us who are interested in shorting the Chinese currency or the Hong Kong dollar, well, it's very important that they run out of dollars to protect their currency and their stock market. So for us to be betting down on their stock market and currency, which are my 2 current most researched plays for that, we'll be covering that in our boot camp for our advanced members tomorrow. That's very important right here. A kind reminder. Okay, now also remember, we don't only want to see China having economic problems. We've already seen that develop dramatically since 2015 when they had a U.S. administration that was essentially patting them on the back, letting them do whatever they want. They almost crashed their economy all on their own in 2015. But now we have a totally different regime in the geopolitical tensions, and we're starting to see them attack Huawei again. And so, in terms of trying to predict what's going to happen in the future, my bet is that U.S. attacks Huawei aggressively and tariffs go up, and the next phase of the trade deal is not accomplished. And here's an interesting quote, which is very good for those of us that want to try to short the Chinese currency and the Hong Kong dollar. Now, I was expecting this would happen after the election, but I'm starting to see moves that are indicating it could happen sooner. So that's very important. Kind reminder to those who have forgotten why Nokia and Ericsson can't beat Huawei. Like yesterday, in the EU, we have this thing called no to government subsidies and other hanky-panky business practices. It's all very noble until someone comes along who doesn't follow the rules. So Huawei was just indicted on 3 accounts of stealing technology, ripping off instruction books. I can't remember what the other account was. But essentially, Huawei's become the #1 seller of phones in the world, not necessarily in profits or in gross sales, but in terms of just total phones sold. They have totally taken over the market. They're coming in and essentially offering their products, their networks, their infrastructure with a super cheap financing plan that Nokia, Ericsson can't compete with. And this is how they're aggressively taking over market share in the 5G. So I think this is going to essentially get both Europe and the US attacking China for subsidizing a very important industry. Foxconn Zhangzhou campus is the largest iPhone plant in China, 150,000 worker mega plant. Only 200 workers are back. This is a communist propaganda Twitter handle. Remember, Twitter is illegal in China, except for their propaganda. Washington shouldn't go too far in cracking down on Chinese media, or Beijing will take counter moves. Many American media organizations have branches in China. Washington is obviously increasing the risk. U.S. imposes new rules on state-owned Chinese media over propaganda concerns. Now, what's interesting is to see the collaboration between Twitter, YouTube, and trying to cover up all this. Now, I just use YouTube to find qualified investors for our program, but we keep our product content private and obviously earn an income from selling a subscription fee. Most people on YouTube are in a business model where they're giving away content for free, and they rely on Google selling ad space to have income. And so their new strategy for shutting out voices they don't like, I've been following very closely, and it started attacking conservative voices over the last several years by demonetizing their ads. Now, if you just simply say the word coronavirus, your video is instantly demonetized. So now they're calling it the cerveza disease, just to bypass the demonetization. So there is clear censorship happening with top US tech companies surrounding this issue. So interesting.
Hey, Jason, that censorship goes a little bit more than just that. I was shocked to find out what happened to my sister. She runs a bed and breakfast, and she had signed up and had participated in some Republican threads, and she stopped getting bookings. And she found out that her Google ads for her business had dropped out of popularity.
Wow.
And
Oh.
her son, who's really good at this kind of stuff, said, go make comments on these liberal left-wing sites and do some liberal activity that Google can track. And all of a sudden her ads pop back up to the top.
Wow. Oh my gosh. Yeah. Well, it's definitely real. I've been tracking this for the better part of 2 years. And macro voices, they actually wouldn't let me run an ad that had the word Trump in it that they were searching through. Also, macro voices is it's got like 5,000 followers. It's all hedge fund people like myself who listen to that content. He did a 2-part series on coronavirus, and now all kinds of his subscribers are complaining that their content's not showing up on the feed anymore. We saw Zero Hedge got banned off of Twitter for an article saying that this could have come out of the Wuhan biolab. So yeah, that would be another interesting thing I think we'll be developing and after this election, is attacking these tech companies who are censoring important voices unfairly. Here's a guy getting tied to a pole for not having put on his mask. Russia blocks all Chinese citizens. That was yesterday. Now they came out with a new piece this morning saying, oh, we'll let a few in. I guess China wasn't too happy about that. Also, if you did listen to There's an ambassador for the EU from China, did a big piece about how great the CCP has been handling the situation. And he was talking trash about the US blocking flights from China, as if that was an outrageous thing to do. We got Bloomberg speaking tonight for the first time. That'll be interesting. It looks like it'll be Bernie versus Bloomberg for the DNC. And now he's talking about having Hillary as his running mate. UBS's China activity tracker sending very similar signals. The red line is 2020, so coal consumption crashing. Property sales nearly at zero. Transport congestion extremely low. This video was really sad. This lady just goes completely off on the CCP, knowing that they'll probably go hunt her down and throw her into a quarantine, most likely. WikiLeaks' Twitter account has been locked right before the Assange extradition hearing. Here's a look at the travel a year ago. So you can see visually the slowdown in travel through China. Okay, now, okay, I'll read the CNN quote first. Newly leaked Chinese records have revealed for the first time the system by which hundreds of thousands of Uyghurs have been monitored and detained in heavily fortified internment centers across Xinjiang. Okay, and the CCP's response is, no matter whether the document is real or not, I believe some details of the de-radicalization program in Xinjiang can be discussed and there is room for improvement. But Xinjiang has realized the bigger goal of restoring peace and stability. So the US propaganda is very good at pointing out, oh, all these people are in these re-education camps. There's cemeteries built right next door to them. It's, you know, there's all sorts of satellites showing that before they have newspapers come in to look at them, you know, they're putting up fake basketball courts and all sorts of things. If you do dig into their side of the story, it's that this group of Chinese were essentially trying to rebel against the Communist Party and were taking bombs to train stations and all sorts of terrorist acts. So they've decided to find anybody and everybody who's has any sort of DNA relationship to this group of Chinese and trying to change their, trying to brainwash them. So I won't get too detailed on that horrific story. Offshore yuan breaks through 7. Again, this has been a telltale for stock volatility, is when China lets their currency find a fair value, which I would argue is probably closer to 10 or 14, not 7. Although US is demanding that China keeps this low and controls it, even though with free market, this would easily lose half its value. And again, that's the Chinese currency, which they say is worth $31 trillion, but it's very thinly traded. And again, that's why we have to be careful about when we want to bet against China. Essentially, we want to see a few things. One, they're running out of dollars. And then 2, that it'll be advantageous to them to allow the currency to devalue, which is typically a response to tariffs, which again, if we just look at one single issue, and it's a huge issue, that's Huawei. I can expect that China will not agree to stop subsidizing Huawei, and that the US is not going to stand back. So I do believe we will have new tariffs in the near future just over that single issue. You know, and what happened to the phase 1 trade deal? They keep saying they will live up to that commitment, but that's hard to believe if they don't get back to business. So we're only 3 weeks into this shutdown. but every week it's costing China tens of billions of dollars, which is why we're seeing their reserve erode quickly. The process failed. U.S. breaks cruise ship quarantine, flies 13 infected Americans to the Omaha facility. Trump administration is considering changing U.S. regulations to allow it to block shipments of chips to Huawei from companies such as Taiwan Semiconductor, the world's largest contract chip maker, according to Reuters. WHO holds secret talks with tech giants to stop the spread of the coronavirus misinformation. Apple do not expect to meet revenue guidance for March quarter. Work is starting to resume around China, but experience slower return to normal conditions than anticipated. The thing that worries me the most about the coronavirus is not my own safety or the temporary hit to Chinese GDP. I am most concerned if it finds its way into a truly impoverished urban emerging market setting like Delhi, Lagos, who aren't equipped to fight it. And again, that's another advantage of shorting emerging markets versus just FXI, which again, one is betting down on the whole area having a slowdown, whereas the other is simply on China. And China is such a closed economy, it can be more difficult to predict what they're going to protect and what they're going to let have some pain. And then another interesting note, as a way of reassuring everyone that he was on top of this problem from the start, China's leader, President Xi, said he spoke about the coronavirus with others in the Politburo Standing Committee on the 7th of January, well before the alarm was sounded. Now, this guy works for a news agency, so he's careful what he says. But this is, I'm not sure this is really truthful. And it's interesting, it's coming out of the Washington Post, which is owned by Amazon. But they also own part of the South Morning Post in China. In response to Senator Cotton's remarks, as well as in previous interviews with the Washington Post, numerous experts dismiss the possibility the coronavirus may be man-made. There's absolutely nothing in the genome sequence of this virus that indicates the virus was engineered, said Richard Ebright, a professor of chemical biology at Rutgers University. The possibility that this was deliberately released bioweapon can firmly be excluded. And again, I don't think you can really prove that. Now, Los Alamos Labs, which is where my family is from, Grandpa was really the head designer of the hydrogen bomb. So there's some smart people up there. They are predicting this has a 6.0 reading on how contagious it is. And that's been circulating, not the 2 that's been put out. And if that's the case, this is extremely contagious. And what's worse is that you can't detect it while it's spreading because of it spreading before the fever sets on.
Hey, Jason, regarding that last article about deliberately man-made or deliberately released bioweapon, they didn't exclude accidentally released virus under study. Maybe
Yeah,
it is natural,
Exactly.
but it was accidentally released.
Mm-hmm.
And then we got Japan's GDP crashing 6%. So crazy world. Okay, I'm going to switch from Twitter. That's at least the last day's worth. Also, remember, guys, if there's a crisis, government can sell its debt. Fed's balance sheet does not increase. So sure enough, Fed's balance sheet has not increased for 8 weeks because we've had crisis after crisis. Okay, let me switch to, let's look at some charts in Bloomberg.
I wonder how they thought that they were going to go ahead and take care of the whole Hong Kong protest issue, and then in the future how they're expecting to take back Taiwan.
Yeah, that's their big goal, is to slowly take over more territory around China.
Yeah, how would they do that when we have we have an agreement, we have a treaty to protect Taiwan. So, I'm just not believing any of that article.
But Jason, I'm a little bit confused about that last one, because you were showing how the Fed is increasing its balance sheet, but that is showing it's not,
No,
or I'm not understanding. I'm confused.
yeah, they stopped increasing their balance sheet for the last 8 weeks. And that's because if the government can't sell its debt, is my screen going wild? Okay, you guys are on the oil screen, huh? That's odd. Do you see the Brent crude?
Now I see the Audi. Now I see the bulletin, Bloomberg.
Okay, it seems like it's a little delayed. Yeah, so if the government can't sell its debt effectively, we see the Fed pick it up and the balance sheet grows. So when there's crises, the debt's easily sold. That's why we haven't seen the balance sheet grow for the last 8 weeks.
Oh, okay. I get it now. Thanks.
Sure. Okay, so here's the Chinese currency, the offshore. And again, I'm expecting that they're going to lose control over this as they run out of dollars, potentially lose control of the stock market and their currency. But I think they're going to try to protect the stock market at the cost of their currency. But again, that would mean we're back to trade war with China, because part of our conditions is that they don't allow the currency to devalue. So keeping a close eye on their treasury holdings and their reserve balance is critical right now. Here's a look at the oil market. Now this is having a little bit of a bounce here, but I would expect this is mostly from the quarter trillion money injection into the financial system that's just buying everything it can get its hands on. But you could see that big crash to start the year out. This is why we like GDX. It cost them a bit under $1,000 to get an ounce of gold, and now it is at 1,600. So again, I always expect spot to go up first, and then the miners to catch up if it can remain elevated. And right now, with all the money printing and lowering of interest rates, I think gold has a pretty straightforward play for us. Here's the SPY. You can see that channel. We've been watching it trade in. It looks like it's going to tip its head out. I don't think it'll stay up there for too long if China remains not operating. But this gives us a few resistance lines to make some bets on where it may bounce around. At this point, I do think it's going to push towards this 350 line in the near future, potentially before there's enough news out there to scare people about supply chains breaking down.
What 350 line are you talking about? We're looking at gold.
SPY.
Oh, the gold charts on the screen.
Oh man, this thing is really lagged right now. Let me see if I can get, let's see what internet's using on this thing. Oh,
Okay, now we're looking at SPY, Jason.
okay. Yeah, it's super lagged. I'll have to do some testing on that.
Yeah, desktop's better. Just a little steep.
SPY
Yeah,
400.
No, I think we could get to 350. I think we got about a month before people are going to start freaking out about China.
What was the options beta doing today? I haven't looked yet.
Oh yeah, let me pull that up. They're loaded on the 340. Oh man, this thing is so lagged behind. This is a Zoom issue. I'll talk to Zoom about this. Let's let it catch up here. It should be at my options table in a little bit.
You want to maybe try it on the desktop too, Jay?
I don't have all this on the desktop set up.
Oh, gotcha. Okay.
But yeah, let's go ahead and take a quick break for questions. But yeah, I think really the big giveaway here is the option table. So I'll leave it at that screen. We can understand why money is flooding the US. And we can look at where the big banks are putting their bets, buy some downside protection, and enjoy relatively easy trading right now.
So Jason, I have a question about the yuan. So you said that part of the trade deal is that China keeps that value closer to 7, pardon me, and but
Yeah,
that they're running
below
out of money
7.
below 7,
Yeah.
and that they're running out of money, and so I guess what you're looking at is basically once they start running short, they won't have the ability to control that, keep it below 7, and they'll have to just let it go and basically be in default of that part of the deal, right?
Yeah, so I think that they're going to have a very hard time because, to protect their stock market, at least on the exchanges that we all trade, they have to be able to have dollars. They can't protect it with their own currency. So yeah, they're just getting a hit on every angle right now.
Yeah, 4 o'clock. Oh shit.
Somebody's late. So yeah, that's where the market's betting right now.
Yeah, wow, up to 2 trillion now too. So it moved half a half a trillion up. Yep, since last time we looked at it last Friday.
Billion, yeah, 2.1 billion sitting on that one single strike.
Oh yeah, I'm sorry, Jay. My bad.
It's just got those decimals, yeah.
Yeah.
So yeah, I would be, I expect it to melt up until a huge sell-off. So that's why we want to have the put option protecting us. And not sell the call option right now. So this is very abnormal times, but it does make our trade predictions pretty easy. And if you're in our pro service and you have the combination of all the assets, this is some of the easiest trading we could possibly have. Now, again, this whole picture changes once the Fed can't cut rates. So if you look back for the last 4 decades, that's the luxury they had. We came from 20% federal funds rate. Now we're approaching 0. And this is a lot like right before the 70s runaway inflation, where they bobbed it up and down right above 0 a couple times, just like we have from 2008 to current. So you can only do that a few times until you print too much money and end up with inflation.
Jason, I have a question about this. So on the 340 strike where you've got that 2.1 billion, I'm assuming, does that then cause that to act like a magnet, but then also act like resistance trying to get above that?
Yeah, so we're going to have people have to cover that who sold that. But yeah, it's absolutely acting like a magnet. So we'll see that. I would expect once we hit 340 that the big volume pushes higher to that 345 seems to be the next hot spot.
Yeah, and they rolled that way up. That wasn't even in the billions last Friday too. Interesting.
So right now we're trying to get over that 339 hurdle. which has 1.5 billion on it.
Right. Interesting. Okay, so hey, Don Lawson, I saw you kept trying to mute your microphone, but we're getting so much feedback that we really can't do that. Can you type in your questions to the chat box? And then if you scroll to the bottom of the screen, just type in the chat box and we'll be more than happy to answer any questions. Let's see here. Martin, I know it was your first time in today. Do you have any questions for us, bud? Let's see here. Sue, I think this is your first time in here. Ulster, Jose Perez, any questions from any of you all? Florian? Sorry, guys.
I don't have any questions.
Yep, no questions from me as well.
Well, that's good. We don't want this to be so complex that you got a lot of questions. Trading can be made much easier than a lot of people would have you believe. Florian has a question about the SPY and the TLT going up in the same time. Yeah, so normally that's not the case. Normally we'd expect one or the other. And typically the way the market's engineered is stocks go up 90% of the time. Very rarely are they having significant sell-offs. Maybe they're not going up a lot, but they're at least not crashing. And so typically we have a kind of like a bread and butter return from the SPY, and then you have to slow bleed on the TLT. And then when a crisis hits, your TLT jumps, protecting the SPY. And then that's how those two, that's why it's such a popular combination. But right now we're seeing both of these appreciate relatively at the same time. And that's again, because money is flowing out of Asia into US products, including its currency, its bond market, and its equity market.
So Jason, you say that trading can be really simple, but you have really opened my eyes to just how complex, convoluted, and screwed up the financial, fiscal, and monetary of the systems of the world really are.
Yeah, it's weird that we have to look at such a horrible crisis and say, "Oh, this is easy, bet up." Yeah, it's socialism for corporations. That's what we're living in a world of, with central banks and all this madness. So,
Jason, do you ever use the VIX to hedge against your SPY?
in the boot camp, we will put little call option bets on the VIX from time to time. But otherwise, the normal advisory is designed to operate with only 4 ETFs, period. And again, that makes your life much easier to follow our program. And it does a killer job of protecting. Imagine you have a put option under your SPY plus you own the TLT. It's hard to get safer than that. VIX was more of a greedy speculative trading opportunity where we could have some huge returns. So yeah, I do like to buy call options on the VIX. And I think that time is approaching soon. But that would be part of our boot camp. Anything outside of these 4 ETFs is only going to be traded in our boot camp program.
Yeah, and Martin, what I like to tell people too, so basically, like with the SPY system, you're pretty much bulletproof, right? If you want to get atomic bomb proof, and really, if you have more than a quarter at work in the market, that's when the pro system really kind of makes the most sense. But yeah, we always like to have that option just structured into our downside protection at all times. It just helps you sleep at night. You're safe. And we've had periods where market sells off. Our put option will go up 700-800%. I think we had 1,000% one time. But it's just nice to have those in place to really either.
And that's during a bull market. We can get much bigger gains on the puts. Once we're out of it. Florian says, "Are you selling any covered calls on the SPY?" That's our normal strategy, Florian. But I'm expecting a melt up. And so call options just aren't worth it right now. Not when we're in this maniac period. So right now, I believe we can allow the SPY to deliver the profits. But the second I think we've reached the top and we're going to get some volatility, you'll see I'll immediately start selling covered calls and buying much more expensive put options to the point where we can actually profit on the way down from doing this. So I think you'll see as the market conditions change, you're going to see how I slightly alter the trade to give us the best risk versus reward. And I do have to keep in mind that a lot of our folks only follow the SPY. So this system has to be good to go completely on its own. So it is multi-directional. We're not just going to bet up 100% of the time on the SPY.
Yep, exactly. Okay, cool. And Dan, I see your microphone is unmuted. I think it's your first time here. Welcome. Do you have any questions for us, bud?
No, it's my first time getting involved with it, so I'm just trying to figure out how things work.
Okay, cool. Very cool. Yeah. So basically, long and short of it is you're going to buy 100 lot shares of the S&P 500, and then you're going to protect that asset with, in our current structure, we're using put options to the downside. So we're going to buy to open a put option to the downside. And you can see the trade alert that is up on the screen. So if you wanted to, if you have cash that's not working now, you're getting eaten alive by inflation, you want to put it to work, you can follow that with cash. If you wanted to test in a paper trading account, you're welcome to do that as well. Okay. But yeah, do you want to pull up the text version of the trade real quick? Just so Dan can look at that real quick. So yeah, Dan, in step one, so this is going to be per 100 shares. So let's say you were going to buy, let's just say theoretically 500 shares of the SPY. Okay. What step one, you wouldn't follow unless you had last Friday's trade, because we went from last Friday, we had the shares of SPY, and what we did is we had the 333 SPY put option, right? As you can see up there in step one. What we did today is either let it expire worthless, or you could sell it for 1 penny, depending on the time frame that you saw it. Okay, and then really if you're gonna structure today, so you'd buy 500 shares of SPY, and then you'd buy 5 contracts of the February 21st 336 SPY put option. Okay, and so that's gonna engineer your downside protection from today until Friday. Okay. So if something macro hit the fan, and the SPY starts selling off, that's going to help either cushion our position or potentially even profit from today until Friday, depending on how nasty the sell-off is. So yeah, that's kind of the long and short of it. And let's see here, Florian had a great question. Jason, I'll let you take this one. He said, let's see, are you selling any covered calls on SPY together with buying the puts for protection? And thank you.
Oh yeah, sure. So we'll start selling calls as soon as we think we're approaching a top, and it's called the option caller. So right now I'm expecting pretty aggressive moves in the SPY, and if we were to sell a call, it would shortchange our potential profit. So right now I don't like to sell the call.
Right, and so that's only when we're in specific periods that we're really expecting to melt up. So great question, Florian. And Dan, did that make sense for you?
I'm just trying to grasp how this all works. This is my first time here, so I don't really have anything to say right this second.
Okay, cool. Well, hey, bud, thank you for taking the time. You can always call me after the webinar too, and we can go in to greater detail about what we do and why, and just how we always take the most defensive approach possible to any investment we make. Let's see here. Let's see. Martin, did you have any questions, bud? Mike Hogan, you've been with us now for a week or two. Any questions from you? Please feel free to type them in. I know you're at work when you listen to us. And Sue L, do you have any questions for us, ma'am? I think this is the first time I've seen you in here today.
A question I have, how often are signals sent? I mean, on a monthly basis, how many signals would you receive?
Yeah, so
on average?
Great question, Martin. So if you do our buy and hold, we literally only made 5 changes to that portfolio throughout the year. Okay, so 5 throughout the entire year. On the SPY, we're going to trade Monday, Wednesday, and Friday like clockwork, and we're going to take advantage of the extra option expiration periods that only the SPY asset has. Okay, there is intra-week stuff with the VIX too, but the SPY is the only ETF that has the Monday, Wednesday, and Friday option expirations. So we're definitely going to utilize those and basically in the shortest time frames possible, re-engineer, re-protect, and in certain time frames we'll actually even add a little additional alpha on the way up. So great question though. Yeah, Monday, Wednesday, and Friday, and it's delivered at noon Eastern Standard Time. Yep.
And it takes less than a minute on your phone. A lot of our clients will use the Thinkorswim phone app from TD Ameritrade. So you could take the text message that comes out, plop it into your portfolio, and you're going to be protected and benefiting from the SPY without the downside risk. That's really the big selling point here, is that you could simplify your portfolio. Okay, you don't need to have 10, 20, 30 stocks out there. SPY is far better investment. And then we can trail it every 48 hours with cheap insurance, so that when there is a big sell-off, you're going to be protected with a long put option.
Yeah, exactly, Jason. And when people ask me all the time, "Oh, Dean, what I feel like I might be buying a market top." Well, hey, that's why we have the put option underneath at all times. And guys, our price targets are way higher than what the price is of the SPY right now. As Mark Cuban said back in January, with the current conditions, we absolutely have jet fuel for publicly traded companies, billionaires, and investors in the market. So, what I tell people all the time is, don't be the inflation bag holder, because if you have cash sitting on the sideline, you're gonna be the inflation bag holder, right? Be the investor that's rewarded by being the shareholder, right? Because guys, the cost of goods production is going to continue to dwindle, probably for the foreseeable future, right? But guess what? That savings is passed to the shareholder, not the bag holding citizens of the United States. Okay, so if you have cash, you're the bag holder. If you're invested, you're the rewarded shareholder, and that's kind of the general.
Yes. So yeah, the general trend here is that every country in the world loves to print money. Okay. And every corporation likes to borrow that money and burn the shares of their stocks. So you have actually less stocks moving into the future, which drives earnings per share up. Revenue doesn't even have to go up. All you got to count on is these corporations are going to borrow money and burn their shares, so earnings per share goes up.
Exactly. Look at Amazon, Jason. Great example.
So your buying power, just think about it. If they print money, the buying power has to be less. So you don't want to own cash. Okay, Florian says, how do you estimate when we get closer to a top? Well, I have a little magic 8-ball. Just kidding. I'm looking for two things, Florian. Number one, supply chains breaking down. That's what's going to scare U.S. stocks. And luckily, we could pretty much just listen to Apple. If they can't get production rolling pretty soon, stock market's going to have a sell-off. Not a big one, probably, because I don't think we're going to expect China to be shut down forever. But I do think we could see some volatility just from that. So that's one good specific company to follow the news flow, because they have to warn their investors and provide a lot of forward guidance. So that'll be one key company to focus on, is just Apple. When's Apple back to work? And specifically Foxconn is who they outsource that work to. That's one. Two, if I were to see the coronavirus spreading in the United States, but it does seem to me, I can't prove this, but it does seem to me that they're doing everything in their power to keep the reported case count to 0 or as low as possible. I think we're at like 15 now. So if I started to see the media start to openly discuss, US case count of coronavirus has doubled week over week, tripled. those are the two things I believe will create a short-term scare in U.S. equities. And again, I love to bet down on any asset because we can make 10-to-1 returns in terms of risk to reward. You don't get that sort of setup betting up because the market's engineered to either go flat or up. It's not engineered to go down because if assets go down, it just crushes the financial system, which is highly leveraged. So I tell Dean, stocks don't go up all the time, just 90%.
Yeah, and obviously central banks, right? so yeah, awesome overview though, Jason. Okay, awesome questions too, Florian. Let's see
One more
here.
question.
Yeah, Jose, what's up, bud?
Yeah. So thinking of the downside and the volatility, you mentioned the put option here for the SPY only, but you don't mention any other protection for any of the other investments. Is there any risk that the TLT can go down and thus warrant a put option for that as well, or a trailing stop?
Nice question, Jose. Phenomenal question. And folks, just kind of want to reiterate, this is in reference to the buy and hold portfolio. And I'll let you go ahead and take over, Jay.
Sure. So not yet. As soon as we get to zero on the federal funds rate, we have to trade the buy and hold significantly different. And it's going to be disastrous for most investors. So right now we have plenty of room to use this TLT as your put. But that probably has another one year before we get to the effective lower bound, which would be zero. Now, if they want to start going into negative rates, maybe 2 years. I don't think they'll do that though, but the Fed minutes will be the key to deciphering that. So they're supposed to release those Fed minutes today, I believe, either today or tomorrow. It's usually 20 to 30 pages of exactly what they're planning to do or considering to do. It's a very good report. Nobody reads it, but I'll summarize it for everyone in our Thursday play. But yeah, we got a good year before we have to really worry about getting towards that zero bound. Right now we're at 1.5 to 1.75. I have this anticipation of rate cuts pushing yields lower. So, there's going to be a rush for the exit in the bond market. If we get to zero and stay there for too long, that I think will cause some trouble. Primarily for the U.S. government funding itself. Right now, people buy up U.S. debt because they think they'll be able to flip it to the Fed with their playbook. Their playbook is cut rates to protect business, then do QE to protect government debt. And so the banks all know this. That's why they are betting huge on bonds, not on stocks, because they know when the time comes, Fed's going to cut those rates, artificially drive up the value of bonds, and they're not going to sell it in the open market. These banks don't expect to sell this massive load of debt in the open market. They expect to hand it over to their buddy, pal, for no risk and a huge return, and then to buy stocks at a big discount. And that's really their playbook. Now, we all thought that the rate cuts were over with. We got through the trouble without the stock crash, and that we'd be in a period of quantitative easing, which means, again, the problem would be selling the debt, not protecting business. But quickly, that presumption was proven wrong in early 2020. Now, the markets aren't showing you that because stocks are at all-time highs, but that's the giveaway with rate cuts. So rate cuts mean they're worried about business, and QE means they're worried about government funding itself. So again, my expectation now is rate cuts for 2020, and after they're done with that, then QE, and not the T-bill QE, probably the notes and the bond QE, because that will be the debt that has to get offloaded from the banks so they can keep lending money to businesses and consumers. So yeah, we got a good year or two before we have to really worry about reaching the effective lower bound. Now, if the Fed comes out in March and drops by 50 basis points or 75 basis points, that obviously speeds up the timeline for us. But they don't want to do that. They know what's going to happen. They know there's a huge problem if we get close to zero. So I think it's really the last thing that they want to do is to have to cut rates. But they will if they need to. And right now, I believe they will because China's economy is crashing.
Hey, Jason, I have a comment about, I believe it was maybe in the boot camp or in one of these updates you were talking about HSBC.
Yeah.
And so I took a look at that and saw that they had an earnings announcement coming up and basically took your advice and shorted that. And because I figured the earning announcement would be the best, most ideal time for them to spill the beans. And boy, they spilt the beans all right. It was like the fart in
nice.
church.
You make a good little clip on that one.
Yeah, I didn't put a lot into it, but it about quadrupled in value.
Nice. Well,
doubled. It doubled in value. Yeah.
That's killer. That's great.
Nice, Mark. Love it.
Yeah, that was on Tuesday this week, right? That they made the
Yep.
announcement.
Yeah,
Yep.
yesterday. Yeah.
That's
Yep.
Scotty did it too. Well, way to go, guys. Yeah, a third
Nice.
of their book is Hong Kong. So that's another way to play the meltdown. Apparently HSBC was protecting their the Chinese currency through the trade war. And I think that's what really just destroyed their P&L. All right, guys. Well, I think that was an excellent webinar. Tomorrow we'll really dive into the treasury market, gold market, emerging markets. I don't expect any big changes in the way we played it from last week to this week. So you could probably predict if you've been with the program for a while what our trade will look like. Meanwhile, I do have about 100 new slides just from tradingeconomics.com of China and Hong Kong. So we can start to closely track their financial system starting to have some cracks, where's the crack, where's the opportunity? So that'll be the focus of tomorrow's bootcamp webinar. And Friday we'll be back to the SPY. So any last questions before we let everyone go?
All right. Let's see here. And Dee Dee, thanks for joining us here today. Hadn't seen you in a while. Any last questions, folks, before we hop off? Okay, guys. Well, definitely feel free to call me if you come up with a question. 505-322-7515. Truly appreciate all of your time and attention today, folks. And look forward to helping you grow your money in the safest manner possible.
Thank you, Dean. Thank you, everyone.